Good morning, traders. It is 8:01 a.m. Chicago time on Tuesday, the 10th of May, 2016. This is another Trader Bite, early nourishment for your trading mind. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The first thing I want to point out to you on Thursday, we have our public open AMA live streaming at noon Chicago time, 1 p.m. New York time or Eastern time, Eastern US. The registration link is shown right there on the video. It's a shortened Google link, but also it'll be posted on my Twitter stream. If you're not following on Twitter, please do so. Twitter.com/FutureStrader71 and just click follow. It'll be posted several times today and throughout until Thursday. So you'll have a chance to register. You'll also have a chance to submit your question. As far as what we got overnight, the key driver was China's CPI coming in a bit light, expected 2.3 year over year in April. Expected 2.4 year over year, came in at 2.33. Food prices jumped 7.4 versus a year ago, but that's still slower than the 7.6 expected. There was a trade surplus in Germany, the largest on record. The Europe's largest economy swelled to 20.6. The trade surplus swelled to 20.6 billion in March. Really good performance there by Germany. And then, of course, they're working out the debt relief issue with Greece, with austerity and so on. And then it looks like impeachment is back on for the Brazilian president. Other than that, top stories, not much to report. As far as what we're expecting for today going forward, we have at 9 o'clock Central, 10 Eastern, we have U.S. wholesale inventories. U.S. wholesale inventories expected at 0.1%. Wholesale trade sales at 0.5%. The U.S. at the same time, we're getting the U.S. JOLTS job openings. This number actually moved us last time. Again, 9 o'clock Central, 10 Eastern. U.S. JOLTS job openings, looking for 5.45 million. That's how things are shaping up right now. As far as what we had yesterday, we're supposed to. We were supposed to. Let's see. I'll get you the man. When sticky windows. This was the primary hypothesis yesterday. As you can see, the video is from yesterday. The primary hypothesis is chop open, potential test higher on the open to take out that weak high. Expected that weak high to go at some point. But overall was looking for a test of 47. 47 being a key level, potentially bounce back up and then fall through and then make its way down to 40.50. That was the primary hypothesis, the highest probability play. I'll show you why in a second here. The secondary hypothesis, it's about 19 minutes into the video from yesterday. It was a long video. Open auction in range. Again, a fairly tight auction, and then the expectation is a test into the 47, again, 46, 47, and a bounce up to 61 and a quarter, 61 and a quarter being key in that it was the gap mid from the 13th. It's an MCLVN from March 30th till the present. But it's also the composite point of control. There's a lot of confluence at this level here. And yesterday, the expectation is that if we can maintain prices above Friday's high, then 61 and a quarter would be the key target. However, the market disagreed with both of those and ultimately did both of those. But mostly so we have our hypo 1 here, a push above the prior day's high, breaking that weak high, and then it rotated down to 48 and a quarter. Couldn't quite make it to 47 even. Couldn't quite make it to the LVN right here, right below, and then it started to drift up And then what we ended up with is, which is unusual, this is unusual, this only happens 18% of the time. We ended up with a double IB at the high that was not broken. Yesterday was a normal variation day. We had a range extension down, but overall, an extremely balanced day. Look at that balance there. The point of control rising just slightly above where it was before. If you recall, the point of control from Friday was perfectly in line. You can see it's hidden right here, the pink behind the black. Perfectly in line with the MC point of control at 51 even. We shifted the point of control just slightly up from 51 even to 53 yesterday, and with a completely balanced market. What this tells us yesterday, what this profile is saying here is watch out. There's likely to be a strong move out of here. There's more. Let's just restate that. There's a higher chance or higher probability of a strong move out of here because of this. And we are right in the MC point of control. And again, look at where the volume is. The volume is there. The volume is there, and you could see that the high volume areas are ascending. Let me draw that better. There's yesterday's balance. There's Friday's upper double distribution upper section. There's Thursday's upper section of the double distribution as well. So you can see that it's slowly shifting up, and there's a buildup over these days. So all I'd have to do is draw a profile around these days, and you can see that there's a fair amount of volume up here that is likely to push us out of this area, and I'm expecting it to push us to the 61 and a quarter. But what it did is overnight it took us to 69 and a quarter, and then we sold back off. We've come back off with the point of control at 65.75. Does anybody recall what 65 and a quarter was? 65 and a quarter was a key pivot level. It's a one-time framing pivot level. It's a weekly single print. That level was very, very important 2 weeks ago, and we breached it. This is where we reversed the weekly trend down and broke it down. And here we are with the point of control right at it. So there's some very distinct things that have occurred overnight that I'd like you to pay attention to come into this session. There's some important auction markers. So you can see here we have our balance. We have pretty good volume on that balance, 1.11 million. That is just slightly above with the most common volume on the day session, on the pit session only, and then the overnight session tested lower. It poked through yesterday's low by a tick, and then it had what we call a failed auction low, and it pushed the bottom by a tick, and it went screaming up. And you can see here it ripped right through the Asian session, and then the European session held, pushed new highs, and then rotated down back into yesterday's high. And we are stuck trading here in this range at 61 and a half. And remember, 61 and a half, 61 and a quarter last time got a point of control. So it's really what's about to happen today is likely to be pretty important. We are moving out of our base in the 51 area, the MC point of control. We're starting to shift away. The overnight session, not only did the overnight session make an unusually large range, but we have a double distribution with an odd tail. We don't see that often. And overall, the key resistance right now in the overnight session is that 65 area, is this 65 area. So that 65 area is going to be the over-under, for what we're doing today. So as I zoom out here, Let's go back. As I zoom out here, you can see that the market has pushed through several levels and is trading in this and is holding just below the 65 area. It's a naked point of control as well from this day. You can see here that the highest volume point has not been retested again since we broke down. That was from the 2nd of May. And the market's coming back up to it. Again, this is going to be a key area today to watch out for. We're in a very, very clustered area here. You got to pay attention to what's going on here. The next target up is likely to be 75.75, with 74.50 being a naked close, a gap close. And what we end up doing is we end up filling this unauctioned area here. You see this gap down was retested between the 74 or so all the way down to 63. We're starting to move into that area. And then the next area up to really pay attention to is this LVN, which is also in line with the MCLVN, and that's why I'm making that the target for today. And look at your overnight high. The overnight high is at 69 and a quarter versus the 69.75, which I've highlighted here, 69.75 being the mid of the entire swing down. So this level here is the midpoint from the high of 2105 all the way down to the lowest low that we've put in, which was last Friday. This is the midpoint of it. In addition to that, this is a low volume node of the March 30th profile. It is also the LVN left behind from May 2nd. There's just a lot going on here between 65.50 and 69.75. You've got a lot for the market to work through here. I'm going to look for a push down. So this is my primary hypothesis. Let's mark it nice and clear so you can find it in the video. My primary hypothesis is to open up responsive selling back towards balance. I expect it to find a base, and I expect it to push to 65.50. I expect it to fight 55.50, get the energy to push the overnight high through 69 and a quarter, and then rotate down and finish the day somewhere in that 65.50 area. This is the primary hypothesis, okay? The secondary hypothesis is it opens, again, out of range and makes an attempt higher, pushes deeper into yesterday's profile, pushes it back into value, finds a base, and then starts moving out, and then it's likely to get stuck here in the 65.50 area. 65.50 area with a potential afternoon test of 69 and a quarter. So I'm looking for hypo 1 for it to be a shallow pull, but then a push through that 61.50, 65.50 battle, 69 quarter, 69.75 test. That's hypo 1. Hypo 2, I'm looking for a deeper push, which means that it's going to require a lot more energy to get it back out. But eventually, through the session, by the end of the session, it's likely to push through to the 69 and a quarter. Hypo 3, it makes an attempt lower, pushes to 65.50, makes an attempt at 65.50, fails through, and starts shifting through yesterday's range. Yesterday's range was pretty low. 48 and a quarter to 58.75, 10 and a half points. That is the lowest we've had in a little bit of time. We can traverse that pretty easily. We could end up with a bearish engulfing pattern, and that's your hypo 3. If hypo 3 clears, then 47 becomes the target. That was yesterday's target. That would be hypo 3. Those are the 3 setups that I'm looking for today as the key trades for the day. So my job is to watch this morning for what gets a reaction. Before I finish this up, I want to remind you that the people around you are very important to your trading while you trade. So if you're trading with other people and you find yourself in a group of people who are constantly acting as victims, blaming the market, saying how they came and how they ran stops and how they, I strongly suggest you disengage with those people at least for the key hours of the day. Figure out what your key hours of the day are. Generally, for most people, those are the first 2 hours and the last hour trading. Disengage from anybody who speaks about themselves or the market like a victim. That in and of itself, is an extreme predictor, in my opinion, in my experience of 16 years, that is a predictor of how your performance is going to be. Just walk away from people who tend to give away their power to control themselves, not the market, and to just avoid blaming the market and being victims. I'm not picking on anyone here, but I just don't like seeing how, the market did this to me, and then the market, caused me to lose 30% of my account, and then the jerks are running my stops. They know where my stops are. All that's just fantasy nonsense. Just don't listen to that. The other thing is, just don't don't be certain about anything in the market. I'm going to warn you that you are not special. I know that the S5's members hear this from me in the weekly AMAs all the time. You're not special. There's nothing about you that can predict where the market is going to go. There's anybody that sits there and says, stay short, it will hit this level. Stay short, it will go here. The market has to go here. The market should go there. What that does is it creates a fixed mindset, and it lures you into a trap that's very, very difficult to pull out of and very difficult to identify. I'm helping you identify it. If you're in a state of mind that the market has to or should or must or needs to do something, then you're fixing your mindset, and you're forcing your eyes to only see what supports that idea. You're not capable, or you're obstructing your ability to see the other side of the argument. It is not the way to trade. I don't think I've met anyone who trades any meaningful size or trades professionally who doesn't have enough respect for the market to believe that it has free will and it's able to change its mind depending on who's participating and what information flow is coming in. There's it only takes one trader to cancel an idea and run your stop. One trader around this planet who has a piece of information big enough that they can bet against you and move the market against you. There's just no way to predict what it has to do or needs to do. Just respond to what it's doing now. That's a little bit of a trade wisdom session there, unintended, but I want to help you do better. Anyway, if you have any questions, catch me at the AMA on Thursday. I'm open to answering questions for that hour. Good luck. Take care.